You're listening to Investify, preaching financial independence and assisting investors to achieve a more flexible and free lifestyle through smart financial planning and real estate investing. If leaving the corporate world and jumping into this thriving industry is what you desire, tune in and listen to stories of like-minded individuals who made the leap to financial independence. Equip yourself with the right tips and tricks to start your real estate journey, making active or passive ventures that are highly profitable and rewarding. Here are your hosts, Craig Kurlop and Ziana McIntyre.
What's going on, everybody? You are listening to Investify. My name is Craig Kurlop, aka the Fi Guy, and I'm here with Ziana McIntyre, aka Z Money. Z, how you doing today?
I am doing great. Thanks for asking. I am really excited because our guest today is none other than Rich Fedke. And if you don't know about Rich and Kathy, you need to look them up. Kathy does, is it called Top of the Market on Bigger Pockets? They have like a market update show that she is on the panel of that, as well as doing the Real Wealth Network. And we're going to go into what real wealth actually means in our show today. How was the show for you, Craig?
I think Rich is just such an inspiring person. I think, like, if there's one person that I'd want to be, in 20, 30 years, it would be Rich, right? I think he lives just such a big, fulfilling life. Obviously, they're so humble. They've got the financial stuff figured out. He's obviously very healthy. He's got a great relationship with his wife, Kathy, and his kids. Like, he's just all the big pillars in life. He's just checked them off. At least that's what it seems like. And so, I think this is just such an inspiring episode. He came back from a pretty traumatic incident and more powerful than ever, right? And so I think, again, I think it's a great episode, and definitely make sure to listen to the end because he dropped some bombs at the end as well. Rich Fedke, welcome to the show. How you doing today, man?
I'm doing awesome. Thanks for having me. Good to be here.
Yeah, thanks so much for coming on. I know you've got, you're quite experienced, and we're really amazed, and I guess it's really going to be fun. It's going to be fun to kind of share your story today. And so I guess let's take it back to where it all started and how you first heard about financial independence.
Oh man, it was a dream back when I was younger. I always thought someday I'm going to be a real estate investor. I actually went through one of those personal development workshops, and they say, write your eulogy. And in my eulogy, I wrote something about he was a successful real estate investor, something like that. And this is back in 95, I think I did that. And there was something in me that was just like, someday when I have enough money. And so I held off. I didn't do it. And my focus was on becoming a personal and business coach. And so I had built up this coaching business that I started in 95. I was doing really well. I had just signed a book deal with Simon & Schuster. I was giving keynotes all over the country. I had a thriving coaching practice. I had a wife, 2 awesome daughters. And then I was diagnosed with melanoma. And that was what sent us into real estate investing. And I'll explain why, because my wife, Kathy, was a stay-at-home mom. And they said, what we want you to do is get tested to make sure this melanoma hasn't spread. And they saw 4 masses on my liver. So after multiple tests, I met with an oncologist, and he looked at me and he just said, it looks like the melanoma spread to your liver. You probably have about 6 months to live. I was 37 years old. It just rocked my world and our whole family's world. And Kathy was a stay-at-home mom. So she was like, what am I going to do to make ends meet if Rich dies? And how are we going to be financially secure? So she started to seek out mentors, and she started to talk to financially successful people, and found out, not to our surprise probably, but most of them were real estate investors. That's how they made their wealth, how they grew their wealth. So it's like, this is what I can do. I can start investing in real estate, and this is how I can provide for our family. And thankfully, the doctor's diagnosis was wrong. The melanoma had not spread to my liver. It was what they call a false positive. But it was 3 months of not knowing, thinking that I had 6 months to live. That was the impetus for Kathy to push herself to find out how to do this. And so after I was healed, after a few surgeries to remove the melanoma, we started to invest together, and we lived in the San Francisco Bay Area. We did a cash out refi on our property there, and we went to Dallas, Texas, Rockwall, Texas, north of Dallas, and we bought 5 investment properties. And that was what got us to be landlords, to realize that we could create financial security and financial freedom through real estate. And then just basically had friends and family just saying, how are you doing this? How are you investing out of state? How are you living in California and investing in Texas? So we said, well, we can show you how we're doing it. And so we thought we formed this little group of friends and family to show them what we're doing. And that group started to grow and started to grow. And we started a company called Real Wealth to help people do that, invest out of state. And now we have 64,000 members at Real Wealth that we've helped to create financial independence for themselves. So quite the journey.
Wow. That is quite the journey. And so did this all happen in 1995? Like, were you seeking out mentors and created this, or when did that actually start happening?
Oh yeah, timeline wise, yeah. No, 95 is when I moved from Boston to California, and that's when I started coaching. I actually was going to start a chain of one-on-one fitness training centers because I used to own a gym back in Boston. But then I saw this ad for this thing called coaching. It was new back then. And so I was a coach from 95 until 2002. That's when my book came out. And so when I signed a deal with Simon & Schuster, it was 2003 when I was diagnosed with cancer. And so it was right then, it's 2003 that we started to invest and became landlords and really learned that whole journey. And that's when we started the company.
So one little fun fact is that I'm actually one of those 64,000 members at Real Wealth.
Oh, nice.
I don't know if you are, Craig.
I know I'm on the newsletter list, but yeah.
Fantastic.
There you go. Yeah, I bought a few houses with you guys a couple of years ago, and I just think you have such an amazing thing going. So really excited to be sharing this with our listeners too.
Awesome. Yeah. So grateful to we have the property teams around the country that are different businesses. They find the houses, they fix them up, or they do new builds. They put the property management in place. They manage the tenants and all that stuff. And so, well, our focus is educating members, inspiring them, to showing them how real estate investing can work, and then referring them to these teams that we know and trust and have been working with for some of them over a decade.
Yeah, that's great, man. And so you started your investing journey kind of in 2002, 2003 when you kind of had to, right?
Right.
Where did you, like, at that time, like, there was no Bigger Pockets, like, there probably weren't many podcasts. And so I guess, like, how'd you learn this stuff, right?
That's a great question. There were not any podcasts. Podcast didn't start until 2005. And I know that because Kathy's Real Wealth Show podcast was one of the first of 3 real estate podcasts on iTunes back then. It was called. So it was Kathy's, it was the Real Estate Guys, and Jason Hartman were the 3 podcasts then. And so how we learned it was Kathy did a kind of a pay-to-play radio show in San Francisco. So she was on KNEW, and she would actually pay for airtime, and then she would have sponsors come on, like a mortgage broker or finance, things like that. And they would pay to be on her show and be interviewed. But the cool thing about that is she was obsessed with learning. So she would have guests on, including Robert Kiyosaki was one of her guests back then. And he was one of the people that said, sell your high priced California rental properties and get into other places like Dallas and into the Southeast. So she got all of her education, and I got all of my education through the guests that she would have on her show. And then we would have live events, and we would invite these experts, and to really learn that way from people who are out there, boots on the ground, people who are doing it. And then also learning from our property teams, like, how are you acquiring these properties? What do you look for? Talking to property managers, what is this a good area? How do you manage it? What are tenants like? So that was the main focus, and a couple books.
Wow, a couple books. Yeah, books have been around for a long time. So
yes,
yeah, awesome. Z, is there anything you want to add?
Well, I guess because you just have such a history and just so much experience, I'm kind of wanting to gear it towards our listeners, which are generally just beginning. They might have gotten one house, but they're getting ready to get started. And so what are some things that you would tell people that are just getting started like you were at that time?
Well, in today's market, because Kathy and I went through 2008 and it hit us hard and we learned some big lessons. So one of the most important things is make sure you have your financial reserves. Make sure you have 6 months of operating and living expenses. So if we do go into a recession like 2008, which this will not be. It's not going to be the same as 2008. There's so many different drivers for this, but we are, the Fed's very clear that they want to create a recession, and it looks like we're heading that way. So it's be prepared financially, have that, make sure that you can control your property. So if you acquire another property, make sure it makes sense from day one. Don't bet on appreciation. I know it's been crazy. The last 10 years has been, anyone could succeed in the last 10 years. It's been so easy with the low interest rates. And I know affordability is tough, but it's like the cash flow and all that was really easy until just about a year ago. So it's like, make sure that property that you acquire makes sense from day one. Make sure it at least cash flows a little bit. Do not bet on appreciation. Make sure that you look at the market that you're going to invest in and make sure that there's things that are going to drive growth there, that people are moving there, that businesses are moving there, that that there's affordability too. So be careful about where you invest.
Yeah. Would you say that it might be smart? For some people to kind of pump the brakes and wait before acquiring anything else here in the next few months as the market is still kind of in this transitionary period? Or do you think, if you see a killer deal, you just go grab it?
Go grab it. Absolutely. Yeah. I think pumping the brakes a little bit, not slamming the brakes on and not saying, I'm just going to wait. And we see this. There's a lot of investor fear right now. A lot of people are just like, this is 2008 again. I'm just going to hold off. I'm not going to invest. And they take their eye off the ball and they take their eyes off their goal. And you have to really look at, what is that goal for you? What does financial freedom look like to you? What is your lifestyle? What do you want to, where do you want to be in 10 years? I think it's a good thing to look at it and then come up with a game plan for that. So pumping the brakes is fine because you're kind of checking it out. You're looking around, you're saying what's going on, but don't stop. Keep learning, keep growing, keep looking for that killer deal that you're talking about, because you find it and you're going to be so happy that, it's like, don't wait. And interest rates are probably still going to go up a little bit. They're not going to go up as much as some people are talking about, like that 9 to 10%. It just can't happen. There's way too much government debt for them to do that. So, I would say take action now if it makes sense.
Yeah. And one fun thing about right now is a lot of people are just slamming the brakes because they haven't had, so many investors have come into the market in probably the last 5 to 7 years where all they've experienced is appreciation. And so now that things are not really going the way they wanted to, they're slamming the brakes. So there's a lot less competition now than there probably ever has been. And the sellers also really are wanting to sell right now. And so now would be a great time to be able to get in and maybe get a deal if that deal works. So Z.
Yeah. Agreed.
Yeah.
100%.
One of the things I think is such a good opportunity about now is that if you can find a deal that you're cash flowing now, in a couple years, if that interest rate does go down with a recession, then you might have this great opportunity to get more cash flow, right? We weren't having that before, but now you could potentially refinance and pull out another couple hundred to 1,000, depending on what your price point is. So that's an exciting thing for the future. Yeah.
And be careful. I think it's also be careful. Don't get too focused on cash flow. You make sure there's a little bit, even if it's $100 a month or $50 a month, you get in that, because there's all those other benefits, especially if you're a high paid worker, it's like you need those depreciation write-offs. So it's like, get that tax benefit. And then you got your tenants paying off your mortgage, your amortization, you're building equity. So it's like, and that happens over time. So we're kind of like boring real estate investors, Kathy and I. We focus on, the long term. We think in that 10-year, 20-year window, rather than how much cash flow can I make this year? It's that long picture of building real wealth over time.
Yeah, I would love to hear a little bit about what your strategy is, because I find that with investors, we all kind of have something different. A lot of times you hear people wanting to run to 100 doors. That's their crazy thing. But you guys have been in the game now for many years.
19 years, yeah.
Yeah. So I'm very curious to see like what your goals are, what your vision is for your portfolio at this point.
Yeah, great question. It's it has changed. Yeah, we were in that. Our big goal back, in before 2008 was we want $5 million in debt. because we know what that turned into and what that mean. It was like, and that was kind of the focus back then because mortgages were so easy to get. You had these no income, easy to qualify for, no money down, all this stuff. And so a lot of people got in that focus, and that was kind of the shtick or the meme back then. It's like, have as much debt as you can, leverage it up, because it's going to pay off this much in the future. So obviously our philosophy's changed since then. And we've seen a lot of people who are like, I want to get to that 100 doors or 200 or 500 doors. I want to go multifamily and go big. And it's starting to come back and bite them. I'm really concerned with some of our friends who have these bridge loans in multifamily. They've tried to get to that whatever number of doors really fast. And now it's starting to bite them because now they can't get the finance rate that they were planning on. They might not even be able to refi out of some of these bridge loans. So that gets dangerous. So our philosophy is just simple, buy and hold, long-term projections. Let's look at this property instead of what's this going to do this year. Let's look at what's it look like in 5 years and, run it through. We use DealCheck. DealCheck.io is the software we use, and we put a property into that. And the cool thing about that is it can show you your 1 year, your 5 year, your 10 year, your 20 year, your 30 year. So you can really look at what does this investment look like 10 years down the road, and you can compare things that way instead of comparing things only on what does this look like over the next 12 months? What's the annual return or my cash on cash return 12 months from now? That can be blinding because I think it's when you look at other properties, you might be like, oh, this makes sense. This makes more sense to buy this property when I look at the 1 year, but when I look at the 10 years, oh, this property over here makes so much more sense. That makes sense.
Wow. I've never looked at properties like that. That's interesting.
Yeah, I'm definitely like the 1 year guy. And I know if 1 year looks good, then 5 and 10 years is going to look great. But it's interesting how you kind of look at it from that long-term perspective. And so it sounds like most of what you're doing and what you're probably encouraging all of your members to do is just buy and hold, right? Like you're probably, that's what I'm gathering. Do you do any flips or anything like that or any big rehabs?
We don't do any flips. No, I've got friends who have done 600 flips, and they got that dialed in, they got the system. But flipping to me it's a full-time job, to really do it right, to do it well, and which is totally cool. But, Kathy and I'm 58 now. We have a grandson. We don't want to be out there with another full-time job. It's enough to run real wealth in our team of 20 people. So yeah, we're that buy and hold, and passive too. We're LPs and GPs and syndications. We syndicate as well. We do residential development. So we'll raise funds for that. We'll partner with our investors and we'll do like a big subdivision. We've got them going on right now in Park City, in Reno, Nevada, in Bozeman, Montana. So that's kind of the other side of the business is the syndicating piece.
Yeah. And so it sounds like you almost kind of like you start off with the small residential and you grow into the larger stuff where you're syndicating. Do you recommend everyone kind of take that journey to raising money and all that kind of stuff if they want to scale and grow quickly? Or do you think it's possible to do this all yourself without raising outside capital?
Well, I think you can definitely go bigger. You could do commercial. You could raise outside capital if you team up with the right partners. Trying to just do it on your own, I think is a huge challenge. It's like, where are you going to get that knowledge and experience just starting off? And when you make a mistake, it can put you in jail, especially if you're going to be raising funds with the SEC. They don't look at things lightly. So I like the concept of just kind of starting smaller and getting your feet wet and learning it and understanding it, because a lot of the same principles carry over, whether you're buying a single family property or moving up to a quad, or then moving into a small multifamily, or then moving into commercial or a mobile home park or anything like that. A lot of the same investing in real estate fundamentals apply. So I always think, but that's just my approach. Kathy's a more jump in, just go for it type. And it's like, it might work. Sometimes it fails. And she's like, whoa, learn the lesson. I'm more of a, get a little better each day, learn a little more each day. So I guess I avoid losses more. It's just one way to look at it.
That's probably a good idea. A good way to be. So I want to get back to just what our listeners are going to be interested in, because some of this stuff gets a little bit high level when you're thinking about big apartments and you're going to be creating a fund or something like that. Generally, that's a little bit further down the road when people have a lot of experience. So I know you wrote this book. You've got a cool book coming out, or it is out, called The Wise Investor. And I have started reading it. I'm probably about halfway through. And it is in story form, teaching someone how to get their financial house in order and life coaching in general. And then it seems to be getting into real estate investing. So do you feel like there's some good nuggets in that book that would kind of help these newbies get going?
Absolutely. Yeah. It's called The Wise Investor. You got it exactly. It's a parable about creating financial freedom, but also living your best life. So it's kind of taken everything I've learned as a coach working with hundreds of clients over the years, all those lessons about becoming your best self, living a better life, being more present, being more focused, being more disciplined, and weaving that with what I've learned as an investor over the last 19 years. And all those stories that we've heard from our members at Real Wealth, like where they were, what they did, and where they are now. There's so many powerful lessons. So yeah, it's a fictional story, but it's based on real people and real life events. And yes, absolutely. The main focus is absolutely real estate investing. I wrote it a lot for the Henrys. I don't know if you heard that term. It's a high earners, not rich yet people, right? So they're high earners, but they're not rich yet and there's a lot of them here in California, especially. And when we used to live in the Bay Area, a lot of, Silicon Valley executives and workers who are making solid six figures. They're maxing out their 401ks, but they're not putting their money to work for them. Beyond that, they're not investing. They have lifestyle creep. So their lifestyle keeps matching their income and they're not investing. So I really wrote it for two audiences, really. One is those people who are doing that. They're not investing their money and making it work for them. They're not acquiring assets. And I also wrote it for the people who are just starting this journey of real estate investing, because it's kind of like a inspiration, I guess. It's like inspiring to be like, this is where you can be. And it takes this guy, Ryan Brooks is the protagonist in the story. And he's this hardworking family man. He's got a wife, a couple kids. He's a computer programmer, a coder. And he's same thing. He's making solid six figures. He's doing all that stuff, but he has no time for his family. He has no time for his life. He's not in the shape he wants to be in. He's not present. And then he meets this new friend and a new mentor who shows him how he can get his financial life in order and become his better self. And so it shows the progress of his life and his wife's over a 5-year period. So you get to see, kind of live through the hero in the story and really get to see where he was, what he did, and what his family did, and where they end up in 5 years, all based on what I've seen people actually do in the real world.
Great.
I love that. I love that. So like, as part of this story, right, I suspect someone living in the Bay Area making, 6 figures plus and not living that lifestyle, like there must be like, they have to take a step back, right? They probably have to find maybe a cheaper place to live. Maybe they have to trade in their car, right? Like, how do you help people through that shift of seeing their friends are going to see them go from driving a Mercedes to a Honda or something like that, right? Like, how do you go through that?
That's a great question. There's something in there about shifting your mindset of, do you want to be rich or do you want to be wealthy? And the mentor actually describes the difference of those type of people and the way they operate, and the way wealthy people think and operate, and the way poor people think and operate, and the way rich people, just financially rich. And, living in Malibu, California, there's a lot of rich people here. Some of them are wealthy. They're happy. They're fulfilled. They're living a great life. And some of them are rich, but they're poor in life. And so he describes that and he explains it. So it's kind of like how the truly wealthy people, the way they operate is not looking at just the show off stuff. They don't operate with envy. They look at what's my long-term plan here? What do I want to be in 1 year, 5 year, 10 years? They use that same approach, and then they're building wealth. So honestly, they don't care what their friends think. It's like they know what they're building and what they're creating and the path they're on. And what happens eventually is their friends start to say, like, wait a minute, like, how are you creating this cash flow? How are you creating this wealth? How are you growing this portfolio? And their friends start to come over to the other side, to the bright side. They take the red pill. And so it's something in there. And it's, there was so much around, like, as Americans, we tend to be programmed to, when you think of investing, it's investing in the stock market, investing in the Wall Street casino sometimes. And so this, another reason I wanted to write this book is to show in a book that people will finish, that people will read the story. That's why I did it in a story form. I wanted to emotionalize the information and to elicit a change in the reader so they can see, oh, okay, I see. Like if I put 200,000 into real estate or 200,000 into the stock market or 200,000 into gold, now I see where I end up 10 years in the future. And it just kind of spells it out. And the mentor spells it out that way.
One of the things I love about you and Kathy, and I've just admired for a long time, is how, unlike a lot of real estate people, you guys are not very boastful. You're not throwing around all the things that you bought, kind of like, I don't know, rappers or something. It seems like in real estate, it's very much about bragging on your status. And you guys have always seemed very grounded. And it sounds like you've manifested a lot. Like I remember the last time I saw Kathy speak, she was talking about manifesting your dream home, and everything seems like a wonderful, miraculous event. So can you talk a little bit about how you guys stay so grounded and how you're continuing to manifest beautiful things into your lives, but still being balanced?
Thank you for that. That's awesome. I really love that acknowledgement. That's why we called our company Real Wealth, because we wanted to keep it real. And it wasn't just about making lots of money. It was about, the money is definitely part of it, but it was about living life on your own terms and real people and real estate, all that stuff. We were just real was a huge part of our company's name because that's important to us. But the process really, it came from coaching. Kathy and I were both certified coaches. We went through about a 1.5-year program to become certified coaches. And we even met in a personal development workshop. So we are about manifesting, not so much in the woo-woo way, even though we're from San Francisco Bay Area where it's very woo-woo, right? but there's some scientifically proven things that we can do that seem woo-woo. And one of the most powerful ones I call it future focus. It's about meeting your future self in the future. I have it in the book. The mentor takes the protagonist through future self. I've done it for the last 15 years or 16 years with the members of our network. Every year we do an annual event in January. We talk about making the most of the year that's coming up. How do you want to grow? What do you want to achieve? Who do you want to become? And I take the whole group. We'll have 500 people in the room. I'll have everyone close their eyes and I'll take them on this mental journey where they actually meet themselves in the future in 10 years. And they get to talk to their future self. They get to see where they're living, what they're up to. They get to ask their future self questions. So Kathy and I have done that same exact process for 25 years now. And it's incredibly powerful. So the talk that you heard Kathy give, she probably talked about how her future self told her, and she came back to Earth and visited here 10 years in the future. She was living in Malibu and she was a surfer, and Kathy hadn't even surfed back then. And we've been in Malibu 12 years now, but so it was about 20 years ago that she did this. And she's like, what, Malibu? I've never even been to Malibu. But here we are now living in Malibu. Kathy's surfing right now as we talk. And so it's pretty amazing when you set that intention, because your subconscious mind, when you can see that future, it starts to open up your eyes, and actually it just taps into that reticular activating system part of your brain, the part that notices things that you're looking for. So if you get that clarity in your vision about this is where I want to go, this is who I want to become, you start to seek out, your brain automatically starts to seek out people and opportunities and actions that you can take in your life to get you there. So I think that's been the way for us, a big way of us manifesting on the visualization part of things. And then we take the real clear actions too. We have a coach that I talk to every other Friday to keep me on track, to keep me accountable, to help me see new perspectives and see what I'm not seeing. So I think there's a really practical side of it too. Once you get the vision, you have to take action.
Yeah, I just love that exercise. I literally think me and my wife, we're going away in a couple of weekends. I think I'm going to do that with her, that 10-year in the future thing, and see exactly what the life wants to be like. But I want to caution people too, that when you are doing that exercise, make sure it's the life that you want to live, not the life that you want other people seeing you living.
Yeah.
Because I think a lot of people, they want the flashy cars to impress their friends or to make sure that their family knows they're doing well and all that. But like, that does not matter at all. It's like, what makes you happy? And, you know, I'm known as a fairly frugal person, but if you know me now, I spend frivolously on the things that I love to do, and I scale back tremendously on the things that I don't care about. The biggest thing for me is like cars. I'm not a car guy. I don't care. I just need it to get me to A to B. I will be driving the cheapest car probably for the rest of my life. But I like to have a nice place to live. I like to go on nice vacations and all that kind of stuff. And so don't compare yourself to other people, and also make sure that you're doing things that truly fulfill you and your life.
Yeah, you know, that's a really good point, because in the story, the mentor explains assets a little bit different and liabilities. You know, I think Robert Kiyosaki did an awesome job with assets and liabilities on the financial sense with Rich Dad, Poor Dad. Actually, Robert wrote the foreword for The Wise Investor, which is pretty awesome. I'm stoked on that. Yeah, really great. But, you know, he talks about, you know, the assets and liabilities in financial sense. The mentor in the story says, because I see assets as anything that brings you income or more happiness or better health or more time. And a liability is just the opposite. A liability is something that takes away from your income or your happiness or your health or your time. So it's a cool way to like compartmentalize things into that asset versus liability. So like your example of the car, it's like, is this really going to bring me more income, or is it going to bring me more happiness? Maybe so. You know, for some people, it's that big goal of, I want a Porsche 911 or something. And it's like, that's what they're working toward. And that's their reward and their celebration, their trophy, which totally fine. But it allows you to step back and say, you know, is this a liability or an asset? Or is this person in my life a liability or an asset? Are they adding to my life, or are they taking away from my life? So just kind of a cool way to compartmentalize assets and liabilities on a bigger, more full, whole life scale.
I love that.
Yeah, I do too. I want to switch gears to talk a little bit about raising financially savvy or independent children that are going to be independent going forward. So I imagine that your kids are no stranger to wealth. They didn't always grow up wealthy, but they've kind of grown into this in the last, you know, maybe decade or so, that you guys have really built a great company. How are you keeping them grounded? What are the things that you're kind of teaching them for their life?
Yeah, it's so important. Our daughters are 29, and well, actually, one just turned 30. Our older daughter just turned 30. We just had her birthday about a month ago, and our younger one's 23. And Kathy had our younger daughter, Krista, on the Real Wealth Show podcast, and she interviewed her about the exact same question. Like, let's hear it from the source. And what Krista said, and I agree, and this is what our goal was coming up, having our kids grow up, was to not provide too much for them, to have them earn it. That's the way I was raised. It's like, if you want something, then we'd ask them, cool, how can you earn it? What can you do here? And so no handouts. And so that was a big one. And our daughters thank us for that today. They're like, you know, back in the day when our friends would get whatever they wanted, we were so envious and angry and all that stuff. But thank you for having us figure out a way to earn it. Our older daughter bought her first property up in Chico, California when she was 24. And that appreciated over time. And then she went on the road and was traveling around, and she rented that out and for cash flow. And then it appreciated more, and she was able to sell that property and take that money and put it into a new property now down in Southern California. So just incredible. So to encourage that. And honestly, it's been kind of easy because they're hearing it at the dinner table. Our younger daughter does all our social media management. So she will watch one of our webinars, or she'll listen to a whole podcast, and she'll look for the snippets, the best lessons in there to share on social media. So both of them have gotten this constant influx of education, and we always rewarded that. You know, instead of paying them for chores, you pay them to finish a book. You know, you acknowledge them that way. And it's like, improve your education. And that way we're not treating them like workers. We're treating them like entrepreneurs where you are rewarded financially for how much you learn and the actions you take and making the world better, really.
Yeah. During the kind of like the teenage years of your daughters, right? And that's kind of when you were really starting to grow. It sounds like your rental portfolio, if I'm doing my mental math of years and age correctly. Were they interested in watching you grow? Like, did you take them along that journey, or how did you kind of get them involved? Because I know sometimes teenagers are just like, nope, my dad and mom are doing that, I'm going to go do the opposite. Right.
Yeah, there was a period of that. Yeah. No, with the older one, not the younger. The older one was funny because she said, Kathy was just like, Karina, you really should be studying and learning and stuff. And she's like, why? I'm going to get your portfolio, Yeah. And Kathy's like, oh, we're going to live a long time. Papa's planning on living to 108. So you're going to be pretty old when you get our portfolio. So don't count on it. You better start figuring on your own thing. So that was kind of a wake up call for her. So there was something we would play the cash flow game together. I think that was a great one. We played that a few times. It's, I think, very educational. I would get them books and be like, I think you'd really like this book. A book that would be like, written for younger people. There's some Rich Dad books that are written for younger people. But more than anything, it was more like just dropping lessons every once in a while. Just, trying not to mansplain or being too much like that, but to just come in and say, hey, we got this property 5 years ago and this is what it did. And the tenants have been paying this mortgage off for us every month. So give them the overall, the big global lessons so they can start to absorb it over time and not being like, you have to learn this or you have to do this or we expect you to do this. So just little reminders of what we're doing in maybe weekly doses, maybe it's like just a comment one week and then next week is another comment. So it's kind of like that, but making sure that we're constantly dropping those little nuggets of wisdom or lessons or setting the example, walking the talk really is the biggest thing.
Yeah, it almost exactly like it almost feels like, you're definitely not forcing it on them, but you're dropping the hints and then you're letting them connect the pieces together. So it feels like they have figured out what mom and dad are doing versus mom and dad telling them what to do, which almost makes it feel like they have the ownership of it. And so then they can go ahead and and create that same thing.
And I think it's the same with a spouse too, because we have a lot of members at Real Wealth who one of the spouses is all into it. They want to invest and everything. And the other one's like, no, I don't know about this. We could lose money, and they're resisting it, or they're no interest. They don't come to any live events. They don't attend any webinars. They don't read any books. And the other spouse is all into it and doing all that. So I think it's the same type of thing. It's like you have to do the slow drip of that knowledge. You can't be like getting angry at the person, like, how come you're not excited as I am about this? And so it has to be just this, invite the other person in, and almost, I think through questions would be the most powerful thing. Like, where do you see us 10 years in the future? Where do you see us financially? Do you see us still working as many hours? What do you see? What do you think our net worth will be? So you start having the other person start to get the gears turning. And whether that be with your spouse or with your kid, I think that's it. The power of the question is way more powerful than any type of teaching or lesson.
I love that.
I love that you use a coaching approach because it
works for everything.
I'm usually a little bit too blunt. I just like run through the wall, but yeah, I should probably ask questions. I think that's great. But I just wanted to say that this has happened on my side as well, where my partner, when I met him, he's from Europe and he thought, I'm never going to own a property. It's just not the same investing in Europe as it is in the US. And so
for sure,
I just kind of worked on him over the years. And now 5 years later, he's got 5 properties, 2 of them from Real Wealth. Awesome. So I think it's been really cool to see, wow, now he gets it. And now he is so grateful for what it's doing for his life. But it didn't start that way.
That's really cool. Yeah. And then when you get 2 people putting their heads together, it's like rocket fuel, right? And then you start like, oh, we got this. Yeah.
Yeah. This is a little bit of a shift, but kind of tangential of what Z just said about, investing in Europe versus the US. A lot of places like Japan and Europe and the prices are so high that it just doesn't make sense for the traditional person to even buy an investment property. Do you see the US getting there? right? Because everyone's waiting for this downshift so they can start investing again. But I think at some places you may see like where it doesn't make sense to invest as traditional investors anymore. And so like it makes sense to buy now so you can have it. And then in 10, 15 years, no one else can buy. Do you see that? Or?
Yeah. And rent's going up for sure. I mean, there's a shortage of inventory, of homes. I think it's at 5 million right now, but 5 million homes short of what we really need. It's been the lowest rate of building, over the past 20 years, the lowest rate of building, especially single family homes but multifamily too. So there's a shortage. So yeah, rents are only going to go in one direction. Accessibility to investing. That's why investing now. And the US is absolutely the best place in the world for investing. There's not many countries, or I don't even know of another country that do 30-year fixed mortgages. And now there's talk of the US moving to 40-year fixed mortgages because of the interest rates to make it more affordable for people where they can, and affordability is so limited right now and prices are so high. Some of these banks and mortgage companies are looking at, well, if we do a 40-year, that will lower that monthly payment. People can get into our property and be able to afford it. So yeah, there's so much opportunity in the US. It's blessed to live here.
Wow.
Yeah.
Can you imagine a 40-year loan? I mean, on one end, it's so great for the affordability. And then on another end, it's a little bit scary when you look at how much you end up actually paying with interest. Like I'm all for leverage, but when you do sit down and look at the numbers, that's a lot. So. Oh
yeah. You'll pay almost like double, right? But the thing is you can lock in that 40-year fix, but don't have an early payoff penalty. So you can always pay it off sooner, but at least you have that security that you can control the property, especially a rental property, through any type of a downturn or vacancy. It's not, you don't have this huge monthly mortgage payment, but on those months when things are going well, you can make double payments or whatever you want to do and pay it off earlier.
So now. Okay. Oh, sorry. Go ahead, Craig.
No worries. Yeah, I was just going to say on the 40-year rates, I mean, in my head, 30 years is a long time. It's probably a third of someone's life. 40 years, it's longer, but it's like I mean, how much different is 30 to 40 years? Like, sure, you're going to pay more in interest, but you're paying a crap ton on 30-year fixed interest too. And so like in my head, I'm like, I'll do the 40 all day because it's still in 30 or 40 years, the rents are going to be so much higher than they are now that it's like almost not going to even make sense to pay it off, especially if the interest rates are so low. So I would say that if you have the courage to go for a 30-year fixed, you should probably have the courage to go for a 40-year fixed. That's just where I'm at.
Yeah,
but
if they start offering it, I would do that for sure.
Yeah. Sorry, Z, I kind of cut you off there.
You're totally fine. Before we kind of switch gears and wrap up, I wanted to hear what's the next step for you guys. You've written a couple of books. Kathy's written her book. You're doing large scale stuff now, syndications. Are you wanting more properties, or are you kind of getting to a place of enough and cruising?
We're getting to a place of enough. I wouldn't call it cruising. Kathy just rewrote her book because that came out in 2014. So she just rewrote the whole thing for a new version that's coming out very soon, updated with today's numbers and today's economic drivers and all that stuff. And she just finished her audiobook finally. I've been asking her for an audiobook since 2014, but so that's coming out too. So we're not just sitting around. Definitely when it comes to our business, we're not looking to grow it much more employees wise. We have 20 employees. We want to be a small giant. There's a great book called Small Giants, and it's about having a very effective company that really makes a difference. We see ourselves as a conscious capitalism company. So we believe in capitalism, but in the sense of having more than just profits as the focus. So we're always about how are we serving our members? How are we serving the property teams we refer to? How do we make a difference in the world and giving back? So one of our big focuses on our mission at Real Wealth, we donate 10% of our profits from real estate transactions to a few charities that change the world, like Mentors International, Operation Smile, Habitat for Humanity. And our goal was to donate $1 million. We're up to 800,000 now. So that's been our major focus is how can we get more people to create real wealth in their lives through buying investment real estate, investing in real estate, building a portfolio. And then from those, I'm a real estate broker. So we get a typical broker referral fee when we refer to other brokers and property teams. And then we take the 10% of that and we donate it to these charities that change the world. So that's kind of a driving force for us.
Yeah. You guys are with EXP, is that right?
Oh, we were with EXP for a while, but we were going to do kind of a national agent program. But then when Bigger Pockets started to do that, we're like, you know what? They've got it. They've got a lot more members. So let's let them do that. And so we just focus on the 15 property teams that we work with.
Okay. Gotcha. Yeah. So actually I was going to ask you a different question. I want to ask a little bit about like your life in general, because we've talked a little bit about your family, which seems like it's on point. Obviously your business has created you guys a decent amount of wealth. And I think it's funny when you've got like the wealth thing figured out, which obviously it seems like you guys do, everything else kind of falls into place, right? Like your health seems great. You just told us you donated $800,000 of charity. You seem very clear. And so I want to say, like, when you talk about the Real Wealth Network, I think it's more than just wealth, right? And I know, I've heard stories that you and Kathy, shred it on the mountains too. And so you're really good skiers. And so
stories, I like it.
Yeah. And so I kind of just want to talk a little bit about like when you got that like financial thing figured out, how does everything else fall into place to live a really great life?
Yeah. And I would say we're still figuring it out. There's still so much to learn about growing wealth and really building long-term wealth. And our goal is still to create more passive income. So we're constantly looking at how can we create more passive income so we can be job optional. We love our work and we love what we're doing, but we want to retire from the things we don't like doing. So that's why we have people on our team to really focus on those things that they're really good at. And we just, honestly, it's about being intentional. So we constantly look, like I said, I do that program every year for the members of Real Wealth, called Be a Focused Investor. Kathy and I do the same thing, and we do it with a family. So we sit down and we're like, what's this year about? Where do we want to be at the end of this year? How many family trips do we want to have? What does life look like in 10 years? What does life look like? I have lifetime goals. Like I said, I want to live to 108. And I'm very clear that I want to be surfing with my great grandchildren. There's something there about on the wealth piece, having that passive income and creating wealth through business and through real estate allows us to live life on our own terms, which means getting out to surf more, going on ski trips, being able to go heli skiing, just all these things like that. Just get in the full adventure out of life and making every day, full. And being told I had 6 months to live was the exclamation point for me on that. It was just like, okay, now I get almost a second chance here. How am I going to live my life on a day-to-day basis? How am I going to get the most out of this life and being grateful for every single day? So I don't know if that answers your question, but that's my focus.
No, I think that's great.
It's a great answer. And we've gotten so much. This has been a really rich episode, rich being rich. But I would like us to switch into our final four. We're going to ask you 4 questions that we kind of ask it at the end of every show.
Cool.
And I guess I'm starting it off. Usually Craig says something about it. Do you want to add anything to that?
I'm all good. No, I think we should get right into the final 4.
Let's do it.
Okay, great.
So, ready? Let's do our little final 4. Z, kick us off.
All right. So what are you reading right now, Rich, besides your own books?
I am reading The Willpower Instinct by Kelly McGonigal, and it's all about how we build willpower and can develop willpower and change our brains on a physical level through neurons and neuroplasticity and myelination and all this stuff. So I love it. Yeah, willpower.
Rich, what is the best piece of advice you've ever received?
I'm going to say be curious. Very simple, 2 words, be curious. And I learned that through coach training. And that's what we had to drill on constantly over and over, is being curious. Instead of so often we think we have the answers. It's our agenda and we have to tell people how to do things and everything. Being curious is just so powerful. I'm literally going to get a question mark tattooed on my wrist, be my first tattoo, but it's my reminder to stay curious. And because it works. Be curious about other people, be curious about life, be curious about learning.
Question number 3, what is your why?
My why is, so many things going through my brain right now, but it's basically my why is helping people become their best, living their best lives. It's in my book. It's what I did as a coach when I take people out rock climbing or rappelling or skiing or something like that. And they're afraid and they push themselves beyond what they thought they could do and they do it. It's like I literally get tears in my eyes. So my why and my purpose is helping people grow and live their best lives.
Well, that reminds me of a quick story. I just came back from this 14er trip. Are you familiar with the 14ers in Colorado?
Yeah. Oh yeah.
Yeah. So me and one of my good buddies, we just did 7 in 7 days. And part of that was this like class 5 traverse across like Crestone Peak and Crestone Needle. And we were totally in over our heads, but we got to the point of like no return, like climbing this wall that's probably like an 80-degree angle. It's like a 200-foot drop. And we were just like scared out of our minds, but we got to the top and like, we just wanted to cry and like give each other big hugs. And we just felt like we just pushed ourselves out of our comfort zone. We did it. At no point did we really think we were going to die or anything because all the holds were good and we were really careful. But man, like, did that feel good getting to the top? And so I felt like I felt what your clients were feeling in that last moment. So
yeah, that's the way I feel when I do something like that. Yeah, you get a little mix of adrenaline and being proud of yourself and courage and all that stuff, and it all just comes together. I think that we need that as human beings. We absolutely need that.
We do. It's almost like a spiritual thing that just comes over you, and it's just it's great. So it felt good. All right, Rich, this is the last semi-real question. What would be the coolest animal to scale up to the size of a horse?
To scale up to the size of a horse. Oh, I'm going to have to go with my spirit animal is orangutan. It's a weird one. I would ride it around. I'd ride it up trees and all this stuff. Yeah. And it would look like my dad or something.
Do you like throw like coconuts or something at it? Isn't that what orangutans do? I don't know.
Yeah, they do it all. They're smart. Yeah. They're kind. They're amazing climbers.
That's awesome. Well, I'm looking forward to seeing you ride around on your orangutan next time I see you. So
I hope so. Yeah.
Yeah. All right, Rich. Where can people find out more about you? We talked about the book. Definitely pick up The Wise Investor, the Real Wealth Network you mentioned. Where else?
Yep, that's an easy one. Just realwealth.com is our website. So everything's there. A lot of investor resources, the podcast, the webinars. And then I think I'm the only Rich Fettke in the world. So on social media, it's just Rich Fettke.
Awesome. Yeah, definitely give Rich a follow there. Him and Kathy, super inspiring and just a wealth of knowledge in the real estate space. So Rich, thanks so much for coming on, and we'll be in touch.
Awesome. Thanks for having me on. Loved it.
And that was Rich Fettke. Z, what'd you think about Rich?
Oh man, I just loved it. I felt like kind of a creep because I knew all the stories that he was going to tell. Like when he's like, oh, yeah, there was this episode with Kathy and my daughter. I was like, yeah, I already listened to that episode, It was funny. It's like when you meet like a famous person and you're like, oh, I know way too much about your life. So yeah, I was having that experience. Love Rich.
Totally. Yeah, I had known that he had suffered from cancer and then came back with a vengeance. I always know Rich is just such a great person. I've never heard anyone say anything bad about him. So, I think again, just such an inspiring story. And again, he just really shows what real estate will do in the long term. So a lot of you listening are likely in your 20s or 30s. And, if you can just buy and hold these properties, even if they're just house tax that you're buying once a year, the wealth that you generate over 20 or 30 years is just absolutely phenomenal. And so don't be afraid to do the boring stuff, right? Just sit on it, hold it, rent it out. And just let the wealth build for you, because like what you have on your side as 20, 30 something year olds is time. And so use that to your best advantage. I wouldn't be trading and retrading and buying and selling and all of that. Just hold on to what you got, enjoy your cash flow and live a good life.
Yeah. On that note, so Mr. Money Mustache put out a post kind of recently, and it's called Why You Will Never Run Out of Money or something like that. But it was such a game changer for me to go in and fill out that spreadsheet, because I'm one of those people who tends to just worry about stuff. Do I have enough properties? Do I have enough cash flow? Is it going to be okay in the long run? But to do some of those future projections, even if you just have a couple of properties, knowing that they're going to be paid off in 30 years, you're probably going to be in a really good situation. So if you worry about money, I'd highly suggest go checking that out. Especially if you're getting started in your 20s, it's like you're pretty much good to go because you get to ride out this long horizon of time. So you don't need 100 properties. You're doing great just because you're here listening to us right now.
Absolutely. And thank you for listening all the way to the end. And if you like this episode, please, please, please leave us a rating and review and share this with your friends, because this is how we make the show grow and we impact more people's lives. So someday when we're all financially independent, we can all be hanging out on a beach together somewhere. So thanks so much for listening. We'll see you all next week.
That's it for this episode of Investify. We hope that these nuggets of real estate wisdom lead to more savvy financial planning and a clearer path towards financial freedom. For more content like this, subscribe to the show at investify.com. Don't forget to leave a rating and share it with your friends. Together, we can transform more real estate newbies into successful and clever investors. Thank you so much for listening. See you on the next one.